Hi everyone, welcome back to the Gold TLDR. Folks, looking back at 2025, gold's performance was nothing short of legendary. It left every other asset in the dust. Whether it was the S&P 500, Nvidia's to the moon rally, or even the Bitcoin craze from a few years ago, everyone is calling gold Big Brother now. But I know what you're thinking. After a year-long rally, is it still safe to buy gold in 2026? Can it keep dominating the markets? Let me give you the bottom line first. Looking at the price action in these first few days of the year, the gold rush looks like it's just getting started. Today's video is a must-watch. We're breaking down the nuclear-level catalysts that could keep gold on its throne. So, whether you're already holding gold and silver, or you're sitting on the sidelines in cash, stay tuned until the end. We might be witnessing a historic shift in wealth. What's on the agenda today? First, Wall Street titan and Bridgewater founder Ray Dalio just dropped a bombshell. He pulled back the curtain on the U.S. stock market boom and revealed a brutal truth. Those stock market gains you're seeing, they might just be an illusion. He's calling it now in 2026, gold is the only true king. But it doesn't stop there. Geopolitics is a total powder keg right now. After the chaos in Venezuela, President Trump has set his sights on Greenland, even hinting that military options are on the table. This isn't just business. It's a move that's shaking our alliances to the core. What's the play here? Why does Dalio think stock returns are fake? How could Trump's geopolitical wildcards push gold to $5,000? And with the Fed locked in an internal civil war over interest rates, will they cut to save the market or hold steady? Don't worry, I'm going to connect the dots and break it all down for you. This isn't just news, this is your wealth roadmap for early 2026. Before we dive in, a quick disclaimer. All content in this video is for educational purposes and reflects my personal opinion only. It is not financial advice. Markets are highly volatile at these record highs. Always do your own research, manage your risk, and never put all your eggs in one basket. All right, let's get down to business. Let's look at the hottest topic in the market, the massive bull run in gold and silver. Looking back at 2025, Dalio, a heavyweight whose opinion moves markets, was very clear in his year-end review. Gold was the ultimate winner. While the S&P 500 looked great with an 18% gain, Dalio poured cold water on the party. He called it a valuation illusion. Think of it like this. If the ruler you use to measure a table shrinks, the table looks longer, but it hasn't actually grown. In this case, the table is the stock market, and the shrinking ruler is the US dollar. If you measure the S&P 500 inches terms of gold instead of dollars, the stock market actually dropped by 28% in 2025. That's a wake-up call, isn't it? Gold's massive gains have turned it into the ultimate anchor of value for global investors. Moving into 2026, this trend isn't slowing down, it's accelerating. Just yesterday, despite a stronger dollar, gold showed incredible strength by holding above 4,450 and is now testing the 4,500 level. We could see it break 4,550 and hit a new all-time high as early as this week. Meanwhile, silver gold's high beta little brother is looking strong too, climbing back above $80. That 2025 peak of 83.75 is well within reach, and we might be about to hit the gas and blast right through it. With momentum this high, the big question is the market overbought, or is this just the beginning? Let's check the charts for a technical perspective. Looking at the daily chart, the trend is a thing of beauty. Yesterday, gold tested support near 4,450 and bounced like it was on a trampoline. We're now approaching that big psychological round number at 4,500. That's it. Looking at the momentum from the last 2 days, the bulls have the upper hand. While 4,500 is a resistance level, the market sentiment is so strong it might just slice through it like a hot knife through butter. Once we clear 4,500, there's no overhead supply resistance, which clears the path to 4,550 or even 4,580. Of course, a smart trader always looks at the downside. If we see a short-term pullback, watch the 4,000, 454,000, 470 zone. Think of this as a gas station where the bulls stop to refuel. If the price stabilizes there, it's just gathering strength for the next leg up, offering a buy-the-dip opportunity for anyone who missed the first move. Now that we've seen the technicals, you might wonder, what is the fundamental engine driving gold so high? This takes us to the shocking fundamentals. Let's look closer at Dalio's analysis because it's the core reason why gold is performing so well. Dalio's argument is sharp. We are seeing a valuation illusion caused by the devaluation of fiat currency. Most people see stocks go up and assume companies are thriving. but Dalio argues that the 18% jump in 2025 was mostly just the melting of the dollar and the euro. It's like playing Monopoly, where the bank prints too much money, the houses cost more, but they aren't worth more. For anyone measuring their wealth in gold or Swiss francs, holding US stocks last year was actually a losing trade. Even more importantly, we are seeing a great migration of global capital. When adjusted for currency strength, US stocks actually underperformed Europe, China, Japan, and even emerging markets. In fact, emerging markets saw real returns of 34%. Meanwhile, the safe 10-year US Treasury bond saw a staggering negative 34% return when priced in gold. What does this tell us? It tells us that global investors are losing interest in dollar-denominated debt and cash. This is why central banks are loading up on gold. Everyone is looking for a Noah's Ark to protect their wealth. Dalio also had a stern warning about US stock valuations. Right now, stock prices are stretched to the limit. Even though AI is boosting profits, that money is staying with the owners, not the workers, leading to massive inequality. Currently, the expected long-term return for US stocks is only 4.7%, which is actually lower than the 4.9% yield on bonds. In finance, that's completely backwards. It means the risk premium is gone, and the risk reward for stocks is terrible. There's also a hidden liquidity trap risk. While the stock market looks busy, private markets like venture capital and real estate are struggling to roll over their debt. If these hidden landmines go off, the shock to the system will be massive. I want to ask you, do you think US stocks are in a bubble? Would you keep holding them, or are you following Dalio's lead into gold and international markets? Let me know in the comments. If Dalio is talking about a slow bleed in the economy, our next topic is a sudden shock, the war risk brought by President Trump. The headlines lately have been one bombshell after another. After the move on Maduro in Venezuela, Trump has turned his attention to Cuba, Colombia, and shockingly, Greenland. It sounds like a movie plot, but he's serious. He mentioned this in his first term, but this time, the tone is much more aggressive. Reports say the administration is even considering military options to secure Greenland. That's a military threat against the territory of a NATO ally, Denmark. The White House has made this a national security priority, claiming it must be resolved during this term. Europe is understandably furious. Leaders from the UK, France, Germany, and Italy issued a rare joint statement, reminding the US that Greenland belongs to its people. They are standing firm on the UN Charter regarding sovereignty and have made it clear they won't tolerate this kind of unilateral pressure. This is a huge deal. It's not just a real estate dispute. It marks a global shift from cooperation to every nation for itself. If the US is willing to pressure its own allies for territory, the post-World War II international order is essentially over. This leads to global instability, higher military spending, and constant sanctions. In a world this chaotic, what is the safest asset? There's only one: gold. This is why gold prices are rising. Even when the dollar is strong, investors are flocking to safety. As long as these geopolitical tensions remain, gold has a risk premium baked in. It's like a booster rocket pushing prices toward 4,000, 500, and eventually 5,000. Finally, let's look at the short-term steering wheel of the market, the Federal Reserve. You might think the Fed has a clear plan for all this chaos, but they are actually caught in a clash of the titans. The disagreement inside the Fed is massive, creating huge market volatility. Let's look at two completely opposite views within the committee. On one side, we have the cautious camp, led by Richmond Fed President Tom Barkin. He thinks interest rates are in a neutral spot, not too high, not too low. He's calling for a delicate balance between fighting inflation and protecting jobs. Barkin's worry is that inflation has been above the target for 5 years, and he doesn't want it to get stuck there. His plan is to wait and see for more data before making any moves. On the other side, we have the aggressive doves, led by Fed Governor Miller, a Trump appointee. His view is incredibly bold. Miller says the data already justifies more rate cuts, suggesting we need to cut by more than 100 basis points in 2026. That is a massive, aggressive move. His reasoning? Core inflation is basically at the target, and high rates are suffocating the economy. He's pushing for loose monetary policy now to prevent a recession, dismissing any talk about him becoming the next Fed chair. This hawk versus dove battle has left the market confused. The Fed's official forecast is for only one 0.25% cut, but the market is betting on at least 2. What does this mean for your gold trade? It means every economic data release will cause a tug of war in prices. If Miller's big cut view gains traction, the dollar will tank and gold will moon. If Barkin's wait-and-see view wins, gold might see a short-term pullback. But here's the big picture. Between Dalio's debt warnings and Trump's geopolitical moves, the macro trend favors gold. If the Fed doesn't cut, the economy might break bullish for gold. If they do cut aggressively, the currency devalues, also bullish for gold. It's almost a win-win for gold bulls. However, as professional traders, we can't be blindly bullish. We always have to have a plan for when things don't go our way. Let's wrap everything up. We are at a historic turning point. 2025 showed us that fiat currency is losing value and gold is the ultimate anchor. Now, in early 2026, gold is knocking on the door of 4,500. Silver is back above 80. And the momentum is undeniable. The catalysts are clear. Geopolitical chaos from the White House, global risk aversion, and a divided Federal Reserve. All of these factors are injecting massive volatility into the market. For us, this is a generational opportunity, but we must trade it with discipline. A break above 4,500 looks likely, with 4,550 as the next target. But don't chase the vertical move. Watch for support at 4,450 to hold. If you're a long-term investor, take Dalio's advice and prioritize real assets over devaluing cash. One last reminder, in a market this volatile, whipsaws, sudden price reversals are common. Don't over-leverage your account and always use stop losses. The market will always have more opportunities, but only if you protect your trading capital today. That's it for today's deep dive. If this analysis helped you make sense of the markets, please hit the like button, subscribe to the Gold TLDR, and turn on notifications. This is the Gold TLDR. Thanks for watching, and I'll see you in the next one. Later!